Hello everyone and welcome to another episode of Value Investing Talks. My name is Eugene Alexiev and I have more than 10 plus years of experience in running my own businesses. Here in our talks we will meet professional and new investors in order to get valuable insights and make better investment decisions in the future. Please note that all of the information mentioned in the podcast is for educational and entertaining purposes and is not a financial advice. And today our guest is Brian, who is extremely well-educated person and he's a private investor. Hi, Brian.
How you doing?
How are you?
Very good, very good.
Could you please tell some words about yourself and how you came to the investing world and why do you like that?
I did heating and ventilation and air conditioning. I joined the military early on, so a little bit about me. I had to choose something to do, so I asked my grandfather, and he told me do heating and air conditioning. So that'll be a good job. I have retired early, mainly because of pensions and investing. Yeah, that's kind of the real simple thing. I'm in the Pacific Northwest in the United States. I have a family, of course, and enjoying retirement. Enjoy investing, enjoy interaction with people like yourself that I can learn from or I can share information. See a little bit about my progress through investing. I think it began in about 1991 when I got off military active duty, and I read a book called Awaken the Giant Within, which was written by Tony Robbins. And
yeah, great book.
Yeah, it talked about all kinds of ways to improve yourself and improve your life, and investing was one of them. So I started learning about that. I started putting money into my retirement program at work, kind of set up my approach. I'm kind of analytical. So I thought, well, let's put in 5% or so, what I could afford at the time with family getting started. And I looked at the investment vehicles they gave. I just decided to choose the ones with the best 10-year average and try to go there because I didn't really have control over what to buy other than what was available. I do a lot of reading. I enjoy learning. So that's one of the great advantages of my approach, and I think anybody's approach to life and investing. I learned about Warren Buffett early on. I think it was from Tony Robbins talking about how well he was, the Oracle Omaha, and a guy that was pretty humble, but had the ability to analyze companies and determine valuations and decide to invest in companies that were basically on sale. His big approach is MOS, margin of safety. So
obviously, you are a really great example of the person who started from little results, and then little by little you increased your portfolio, adding some money and capital to the initial sum, purchasing the right companies for the long period of time. And I have a question. When you talk about the Buffett and learning from him, did you learn from him in the beginning? So you already knew you would become the person who will purchase the particular stocks for the long period of time, or you just considered that like a side hustle and the option to be free while you're retired?
I always like to emulate the great people that do their whatever it is they're doing. Yeah, it was just slowly picking up. At one time I thought I was smart because I read a lot of books. Then I figured out that it's not as easy as thinking you're smart, but analyzing stocks and stuff like that. So Buffett was a great influence in humbling my young and vicarious ways of thinking I could do the same thing as him. But over time, I actually got to go to some shareholders meetings and stuff and learned a lot about determining intrinsic values of companies so that I can understand the price and the price I should pay to increase my odds of gains.
Yeah, it's really interesting when you just start And I also see it by myself when I started investing in 3 or 4 years ago, even though I had background in a business, didn't know so much. And then little by little, you start knowing some gurus, you start learning from them, and you see your first results, and then you understand that, God, that this is great, and this is really works if you do it right. What was your, I would say, the biggest insight when you started doing investing? So was it like the looking on the giants like Warren Buffett, or understanding something that this is really possible, and you just need patience, or how was that?
Yeah, I think that's it. The patience, and to understand that you can invest a little over a long period of time and it will grow a lot. Read a lot of books and I thought I was smarter than I was. So then I referred back to like Buffett and stuff like that and tried to understand why he does what he does, understanding probably my own biases or my own ego and all these things that can get in the way of making rational decisions on a particular company or investment, whatever that may be.
Rationality is really important because you need to think clearly about the firm, the management, the price in general, because sometimes the market, even now, the market is kind of crazy, and you can find so many companies at the attractive prices. It's really interesting how the macro affect the people. I have another question about the investing process. Do you have some kind of rules in your mind? So you previously said that you need to be really consistent and you need to invest for the long term to keep to the margin of safety. What do you recommend to see on other indicators for our listeners?
History teaches us a lot about the cycles, economic cycles and stuff. And if you can determine where we are in the cycle, you can determine how much risk you want to take or what kind of risk is out there. So it's important to understand history and how business cycles work. And it's just not that you're trying to pick the tops or bottoms, you're just trying to understand how much risk is out. And I think the Intelligent Investor book is one of the best books ever. And Warren Buffett has said that too, that, they had an approach where you never go less than 25% in stocks, basically, or up to 75%. And just because you just never know what's going to happen, you kind of gauge that around your feelings of risk. At certain times, there's great opportunities. I mean, like now, I believe it's one of those once in a lifetime or a couple times in a lifetime opportunity to invest in great businesses at a extremely attractive price if you can wait 5-10 years for it to the cycle to change. And or actually the cycle may change at any time, we never know. But to understand that, I think that's important to understand history, valuations, not only the business itself, but also with the socioeconomic, macroeconomic. They all help you to determine a safe entry point and possibly an exit point if the story changes on that particular business based on those things.
I totally agree with you. And I also wanted to add that if one of our listeners just started in the investing, it is also, I think, important to learn about the psychology, because as Brian said, cycles changes, the history changes, but the psychology of people remains the same. Most of the patterns and the human biases remains the same as well. When you understand the human nature and understand how people react on different occasions throughout the history, I think it's really important. And the more you read, the more you learn, the better. Would you recommend some more books which you learned and read throughout all this time? You mentioned the Intelligent Investor, which is obviously one of the greatest book of all times. Do you have any other, I would say, insights or about the books?
Yeah, there's just so much information out there. It depends on what type of investing you're doing. I've always liked a book called A Simple Path to Wealth, which is basically based around index investing, low cost indexes, which can be great for a person that doesn't want to or can't afford to put as much time that is needed to analyze stocks, individual businesses. That's one of the greatest books. Intelligent Investor. Richer, Wiser, Happier is probably one of the greatest books about the history of gurus, great investors. Highly recommend that if you want to get into understanding how other people succeed. Like you said, the biases, psychology, sociology books. I mean, you just never know where you might pick up something that you'll go, aha, or our own personal biases that we know that if we loss aversion is probably one of the more powerful biases. Confirmation bias, which is, confirming what you believe to be true, which may or may not be true. Anything to do with understanding, like you said, the biases are challenges of making rational decisions under pressure or inherently just in our nature. We avoid loss more than we enjoy gain. So sometimes when you buy a stock, you may buy it and think it's a great price and it continues to drop. Loss aversion kicks in and suddenly you say, oh, maybe I should sell at a loss. Or you probably should rationally think, is the fundamental still good? Maybe I should buy more. It's on sale. I mean, I think that's happening right now for a lot of us that are investing or proposing to invest in companies in this business cycle.
You mentioned a really great idea about the aha moment. The more you learn, the more you read and talk to other people, the more you start seeing these aha moments when you see, as you said previously, the company which is traded below its intrinsic value, and it should be valued by the market for much more. But unfortunately, some people do not see that, and you just make this decision. You wait for some long term if you are a value investor, and eventually you can make some money. What would you advise some new investors or new listeners? Because in most cases, our listeners, not only the beginners, but also the intermediate people who already manage their money. Do you have any ideas where to start, where to look, how to improve the investment making decisions?
For the beginner, just starting to invest, just start. I mean, index funds are probably the simplest way as you begin a journey if you decide that a single business is a way to go or multiple businesses. So index investing, I think, through a 401k, a IRA, or whatever programs you can do, just get started. The sooner you start, the better. Some people say, oh, it's bad time right now to invest. And it's like, no, in a way, it's a good time to start dollar costing because the price is getting cheaper, it appears, almost daily or monthly or whatever. But it's just to get started, just start doing it. I've taught my kids to do the same thing. I kind of bribed them and I said, oh, you put in 500, I'll give you 500. You get 100% return. Just do it because you're 25 or 30 years old. You got 25 to 30 years of compounding in which you can make a lot of money. When it comes to more intermediate, just keep learning and decide if indexing, you want to be a passive investor or a active investor, basically. Do you want to put the time into it, or are you too busy doing fun things? If you don't have the time to put it into it, indexing is the best way to go, and just keep putting it in and ignore the noise and just keep doing it. Individual stocks are a little more challenging and you really need to do your homework because if you follow the crowd, chances are you're going to lose. But if you break away from the crowd and you find undervalued companies with great potentials in the future and you ask the question, what could go wrong enough times, and you see that I think this will make it, then do it. Don't be afraid of making mistakes because we all make them. Don't over leverage. Don't put all your eggs in one basket. Have a concentrated, diversified portfolio and hang with it. And if something does look like it's not going to work out, well, you have to make a decision.
The earlier you start, the better investment results you will have. There is a great, I think it's Japanese quote that the best time to plant a tree was 20 years ago, and the next best time to do it is today. The earlier you start, the better you will be. in that case. That's why we speak about on different investing topics to become better every day, to make better investment decisions. Thank you so much, Brian, for this valuable talk. I hope you and our listeners enjoyed the conversation. And if our listeners have any questions, they can always ask them in the messages or the contacts to the podcast. You can also join us to our Discord group where we meet every week discussing different stocks ideas and news about the companies. So if you are really interested, you can also join us there too.
Yeah, I would say one last thing, that if anybody has, or you should find a compound interest calculator and sit there and run it for 30 years.
Yeah.
And see what occurs. And when you see that, it should motivate you in saying, hey, I want to retire early, or I want to travel the world, or I want to, buy a big house, whatever your desires are. And knowing that it's not like winning the lottery. It just takes time and patience and some money, and just do it.
Thank you so much, Brian, one more time.
Oh, you're welcome.